The following is an update and technical analysis on QQQ, the largest component to the technology sector based upon the daily interval, in which I will deep dive under the hood of the USTECH100 NASDAQ futures, where we had some big headlines today within the trading floors, really reverberating with the intensity of a potential brewing storm, where markets braced for impact ahead of Powell's looming speech tomorrow in the prelude to the PCE numbers that could redefine the financial landscape, most notably with the front end of the curve, where stocks, bonds, crypto, crude were all caught in a synchronized plunge off the open, where a stark reversal from the fleeting optimism that gripped recent sessions. The NASDAQ fought valiantly by titans like Nvidia and Meta, but the rest of the market wasn't as fortunate, with small caps taking the hardest hits, treasury yields crept higher, and the bear steepening yield curve whispering tales of caution in investors and traders, where gold rallied, defying the surging greenback in the US dollar, while crypto, caught in a wild swing, seemed to sense an impending fracture within the system of the cryptography markets. The VIX climbed and the dollar ignited, where one couldn't help but feel that the markets were teetering on the edge of revelation, anticipating perhaps a catalyst that could either stabilize or shatter this delicate balance. And I believe we've been caught within a key pivotal structure within big time resistance level that is starting to be taken out off the 480 handle, which is the defining back end of the top of the gap there that has been completely backfilled here, ultimately taking out that major reactionary high. And what you have here is a redefined, renewed gap at the 496.40 price range level, with only an additional potential 1.6% move to the upside that would be needed to be heavily defended by bear traders and or short sellers, really at all costs, with an unfilled and unchecked gap down below. That could be the pivot point for an additional retest of the 50-day moving average, and then ultimately the potential of a primary rechallenging off the bottom of this primary channel, uptrend and channel, which is in high zone with high synchronization of the 200-day moving average. Taking you out to the US Tech 100 cash futures based upon the daily interval here, and these are some big time key transitional levels that are starting to be taken out off the 786 fibs retracement, call it the 19,952 price resistance level, and that is beginning to be quickly taken out here with conviction, although short sellers are hoping for the momentum fueled overshoot back into the range to retest the 618 fibs retracement, call it the 19,320 price support level, in confluence of its 50-day moving average. That will be a dual price support level. An additional bigger move to come. Short sellers want to see a revisit of the 50% fibs retracement, called the 18,877 price support level, in confluence of the 200-day moving average and the primary big major reactionary uptrend line support level. Major reaction, call it a concealed hidden uptrend line, where you have additional wick-like reactionary low reactions. You have inside major reactionary highs around that key inflection point, and ultimately pop that level, backtested it once again here, and it was really off to the races in a beautiful defined uptrend. Backtested it in correlation of its 200-day moving average. You get the picture, just huge volatile swings in each direction. Backtested it once again, and here we are standing on the precipice of a major price resistance level, including the 1 fibs retracement level at the 20,756 mark. That would be the ultimate, really biggest telltale for stop to go off, margin calls, short sellers panicking to cover their price positions. That would be the ultimate double top scenario that every short seller and or bear trader is looking to define, and that would be a big key inflection level. You could begin the scaling in process, short trade process within this key range. Ultimately, it's transpiring for a major leg down. If not, begin the averaging down, dollar cost average down your short trade position for that ultimate double top scenario. And that would be a great validated risk reward ratio to the downside. Long traders, bull traders, they want to continue to defend the 786 fibs retracement, 19,952 price support level. That has had major reaction really across that entire sphere. You had your major reactionary highs, additional major reactionary high here, and you got a backtest reactionary low here. And long traders need to defend this level really at all costs to go on to rechallenge the 1 fibs retracement level, ultimately defending what has been reclaimed as of now. And so the markets, I believe, are standing on the brink, caught between fear and anticipation. Powell's words and the PCE data continue to loom, where they are either ready to ignite a rally or deepen the plunge, where the stage is set, and tomorrow we'll decide if this was just a tremor or the beginning of the quake.